everyone. This is Rakesh here, and I'm really excited to have in Nithin and Dilip for the FinTech keynote. And we have been waiting for this moment to really talk about what's up there in 2021 and beyond. And so what next in FinTech is what we want to talk about. If you all know, Nithin has been, you must be knowing him. He all of you in India would know. So he has been a founder and CEO at Zerodha and Reimagine. I have Dilip, who is in US, and it's very late in the night right now. And he is a CIO and EVP, or rather early in the morning, right, Dilip?
It's night.
It's night, okay.
But it feels like the same thing.
So he's a CIO and EVP and of US Bank Corp, and one of the very large banks, one of the top 5 banks out of US. So just for those who don't know, here in India, and let's head start, right? Dilip, I have a question and thought, and maybe it goes back to the little bit of a background, right? You were like in very early days of FinTech. You started your career in FinTech as a serial entrepreneur, like one after the other, and you, like very early days of PayPal, very early days of Google Pay. Like you've seen this FinTech maturing, right? And with US Bank and the whole banking thing. And especially now, the bank going from the front to the back, right? They're becoming more faceless banking, right? And being a backbone behind it. So how do you see this evolving like over 2 decades now, maybe 3 decades now that you have seen around in the
FinTech? The space has grown quite dramatically. So literally the number of FinTechs has exploded. And partly that's for very, very simple reasons, which is financial services. If you think about it, healthcare and financial services are the 2 things that matter the most to people. And as technology has made it possible to do more and more things, with much more differentiation than simply taking deposits and lending, it's gotten a lot more complex. Basically, fundamentally, what has happened with fintechs is the realization that you can start increasingly personalizing the kind of financial services that different kinds of customers need. And that is what has driven kind of the growth in fintechs. What we're seeing now, though, is a slightly different situation. Suggests that what's happening now is that the distinction between fintechs and banks are really kind of reducing quite a bit, because as things start scaling, the initial era of fintechs was trying out new services. And after the Darwinian thing goes on for a while, after some things become clear that they work, then banks are also then able to basically offer those same kinds of services across to a broader base of customers. And so that combination basically means now banks are looking like fintechs. Some fintechs are adding banking services. So that distinction is kind of reducing quite a bit now.
No, great. And I think this whole concept of faceless banking and where, the bank was all about, going there, getting the money out and automation and all of that centralized system. But now it's all API-based work, right, for the bank. And how do you see that growing and difference on that?
I think financial services ultimately it's a relationship kind of business in the sense people need advice, people need support, so it's not drag and drop as much. There are some things that you can do, maybe make payments, but almost everything else requires kind of a little bit more personalization, specialization, and so on. So what is happening now is that things like APIs are getting, frankly, to be more efficient than anything else, but banks or fintechs are not becoming more faceless. I think what's happening is that there are a lot more interesting ways, to take bits and pieces of what others are doing and to craft a more central product for customers. And so you're getting the benefit. It's almost like Amazon is still a retailer.
Okay.
End of the day, they're digital, but they're still they're coming to your house and dropping everything and so on. So it may seem faceless, but they're pretty much all about the relationship. Financial services, I'd argue, is kind of the same way.
In fact, that takes me to Nithin. This whole point of being very personal and I think the journey of Zerodha, when you started, as you started with solving a problem of trading that you had, right? You not just solved it for yourself, you solved it for everyone around, and massive amount of retail investors out there. I think, I don't know, 4 million, 40 million is odd what possibly you have, maybe more. I don't know. It's rapidly growing. So I think the top one in India. It's amazing. I've been using this for last 6 months, and I feel very personalized when I use this. Although I'm doing transaction at the end of the day, but I think there's something about it which really helps me, assist me. This kind of personalized fintech services, and I think what I like is you are trying to address something which is fintech was earlier what I always thought was about transaction, about taking money and all of that. But here I'm seeing it's about prosperity, it's about growth, it's about wealth management, right? Uh, it's a different perspective. If you can throw some more light in terms of how the space is going to grow, I think that'll be awesome.
Thanks. Thanks for all the good words, Rakesh. So like you rightly said, right? We started 2010, and around 2010 to 2014, the focus was mainly to build a platform where the costs were lower, right? So we were using vendor-based products, and we were trying to solve problems for very active traders in the markets. And by then we realized that the markets for active traders is very shallow in India, and we said, we need to kind of expand the markets. And to expand the markets, we knew that it can't just be another buy sell button on a trading platform, right? As in, there's like first time users wouldn't find that attractive enough. So we said, we need to probably have a WhatsApp moment, a Uber moment for capital markets. And instead of building this all ourselves, we said, we should maybe partner startups to do this. And so we launched this thing called as Kite Connect APIs in 2015, and working as a service, as an idea. Maybe one of the first guys to do this around the world. And then we invited startups to come build on top of us. So a lot of these platforms that you're seeing on Zerodha today, right? Like Small Case, who helps you build,
awesome.
Invest in the ideas, or Streak, which helps backtest trading ideas, etc. They're all separate businesses today. Right. And I think one of the most exciting things for me as Zerodha has been to enable a lot of these businesses to come, get started, get to scale, leveraging our business. That's been very exciting. Now, we also did another thing, when you talk about prosperity, wealth, etc., right? I think in India, the other challenge has been education, financial education, right? So we built Varsity, which is probably after Investopedia, the second largest in the world in terms of capital market education, completely free, open, right? And but then, once we've done these two things, we still realize that this is not enough because people don't have the bandwidth to sit and learn, or just offering a platform that just helps people direct better is not enough, at least in the India context, and I kind of agree to what Dilip says, right? As in, I think this can't really be faceless. I think the way to grow the markets in this country is I think through advisory, because people need help, right? When it comes to money, you can't just give, just a push notification on a mobile app isn't enough, right? People need, some kind of trust, in that whatever that you're trying to push, right? So and talking on the phone, meeting people.
Absolutely, my money, right?
Yes, absolutely. When it comes to money, right? Especially when the audience isn't as financially literate. I mean, maybe in the US, because you've seen a lot of these startups, like Wealthfront, Betterment. I mean, all of these guys do well because I think intellectually, in terms of maturity, in terms of managing finances, I think US is way ahead of India. Right. The good thing, what has happened in 2020 is a new audience almost has come to the stock markets. Right? So it's a lot of fence sitters who've been thinking about whether I should invest in the stock markets or not.
People like me.
Absolutely. 6 months, right? I mean, I'll tell you what, I've had school friends, right, who know that I've been in this market, in this business for 20 years. They opened their accounts this year, right? This year as in 2020, right? I mean, so a lot of those people who were thinking about it, I think the multiple enablers this year, 2020 was one is, of course, markets being low and being like an opportunity to invest in. 2 is your bank deposits are really low, so people are looking at an alternate. And I think 3 is more importantly this whole work from home. I think it gave everyone time to think about like an alternate asset class.
Yeah.
Right. And so what the good thing for India right now is that maybe the markets in India for people building products around saving, wealth, investing has just doubled in the last 1 year. Right. I mean, it's a very shallow base. It was probably 20 to 25 million. It's probably become 45 to 50 million. The kind of target audience of sorts. Right. And so the opportunity is to build the right kind of products, as in, like I said, I think, are we as Zerodha a wealth management app today? Maybe we are not. As in, of course, we have great platforms to help people manage it themselves, but I think managing it themselves isn't enough. Someone has to solve the problem of helping people how to do it, right? And I think that's where the big opportunity lies in India for startups who are hoping to solve this problem. And yeah, I mean, we are. We are very happy to partner with anyone who's building anything around this.
Awesome. I mean, I can understand being my experience in with Tally, where we were kind of serving almost businesses in India, right? And maybe some are paid, some not. Working with those businesses, trying to solve their problem. The mass problem is a different problem than an enterprise problem, right? So it's a different space to be solving a problem for masses. And it takes a time to evolve the product and actually go with the people, be very sensitive and build those solutions around that. I think those are the thoughts that I'm seeing it around, and which is very nice. I have a different kind of question, like, specifically for your companies, right? How do you see an outlook of next 12 months or 2 years, right? And maybe that's an aspiration that you would state, but you would probably be acting on it right now in terms of creating actionables. How do you translate this aspiration to executional? So there are 2 parts to this question. I would really like to hear from you that what's your aspiration out there for the next, and how do you execute? The reason why I'm asking this question is we have a lot of amazing product leaders in this conference right now, and they're all out there, entrepreneurs out there. They're all aspiring to achieve big and really do that. So how do they actually aspire, and how do they execute on their aspiration? Is something, some tips on that would be also be great. Dilip, if you want to go first.
Sure. So if you think about stepping back and looking at aspirations a little bit more broadly about what you can do and what you can influence as a company or as an individual, for us in banks, and this is probably true for many, almost every bank, but for us, which is first and foremost, is to accelerate digital transformation. I'll talk about it more about the kinds of things you can do as opposed to what you can hope for, sales and revenue and all of those are kind of outcomes. But what you can do to kind of get there are, for us, it basically means all of a sudden more customers, because of the pandemic, have gone digital. And I suspect that's part of what, Nithin, you were speaking as well. Work from home and kind of a variety of things. So all of a sudden, literally in the US, about 25 percentage points increase in digital access, which is phenomenal if you think about the whole thing being on a 100 percentage point scale. It's a huge movement. And so what that means is, how do you start for that market? Creating products that meet that new customer situation. Little things like all your customers are now at home. They need to be able to do more things at home than ever show up and meet you or meet your reps. And interestingly, in addition to people coming on their mobile phones, the other channel that has been a huge growth one for us is the call center. Okay. So we think of everything digital as being new. Call center is not, but it's still a huge kind of growth. So how do you do that? How do you basically start putting out new products, new features, personalized things, but do all of this faster? Because people are increasingly, one of the changes with kind of the digital adoption of customers is people are getting a lot more finicky. Customers are now used to things coming through much faster. They compare everything to the most cutting edge, coolest, Uber or other app that they have. And so how do you make sure you get that level of, quick delivery? And for banks, the additional issue is how do you do all of this in a very safe and regulatorily compliant manner. So it's just kind of a, not just efficiency, but you're in effect changing the wheels of the engines of the plane as you talk about, right? When the plane's flying. So kind of how do you do all of this at the same time? So I think the adding, going after the digitally kind of enabled customer and making sure you get all your internal systems to be able to support that is actually a big deal.
Name one thing, Dilip, which is like a big shift which you will see in, let's say, US Bank and 2 years from now, a big shift.
It's literally kind of the easiest one to look at banks is kind of, most banks, at least our size. So just some context, we're the 5th largest bank, which basically means, and we are a full service bank. So we have retail, mortgage, wealth management, commercial, payments, cards, kind of merchant acquiring, kind of the entire spectrum of services. So as you for us, what this means is how do you do all of this at scale? So, our assets are roughly slightly north of $500 billion. And how do you kind of do all of this in each segment of the market, making sure you're regulatorily compliant and yet moving at that speed? So, the obvious visual thing that it looks to everyone is branches. Like every other bank, we have a lot of branches, but customers come to branches to do very different things. It's not that they don't come to branches, but they, as Nithin was saying, it's ultimately when it comes to money, people want to do something. They have some questions, they want assistance, they want help. Question is, how do you morph that? It's not the same thing because previously they came to you for depositing a check. Now, it's not a physical transaction, maybe more advice. And with better tools like the automated investment and wealth management, they're not asking for obvious questions. They're asking for your kind of guidance on how do you actually help them kind of select and make decisions that are, like a little bit of Uber decisions on top of that. So getting to, finding out what that means for you versus for the next customer and kind of providing those services fast enough is, really what we have to do better. That's really kind of our aspirations.
That's fantastic. I think building that empathy and being able to provide that advice would be very, very key, especially in the fintech world. Yeah. Nithin, what's your thought on the next 12 months to 24 months? How does it look for Zerodha or Rainmatter and stuff?
Yeah, I mean, I think last year has been quite crazy. As in, none of my predictions have gone anywhere close to being right. So
we all know everything. What is certain is uncertain, right? So
yeah.
But still, we kind of find this out.
Yeah, if someone asked me in Feb, what do you think of the year? I would have said, dude, if everyone's locked work from home, we would be probably down as a business. But we grew 2-3x last year.
Yeah.
So I don't know if I can really predict. But just adding to what Dilip was saying, right? I think, especially in India, right, the regulations are evolving very fast. So for people building products, you need to have almost like a regulatory foresight, saying, this is where potentially the regulations can change to. And when building products, make sure you're in sync with what you think is the future regulations going to look like. Right, because for people building products, every time a new regulation comes through, and if your product is kind of aligned to that, you suddenly get almost like a big first mover advantage over everyone else, right? And that's been one of the big reasons for Zerodha's success as well, because every time regulations have changed in the industry, we've been ready before everyone else, and every new thing has just helped us grow a little bit more over a competition as such. And also I think in this whole thing, right, this whole right place, right time is a very important thing, right? As in, so you can do whatever you can as a business, but you can't really control any of these outcomes. And but like what Dilip said is just, I think you need to get there every day and make sure your product is better every day for your customer, right? As in, as long as you can keep doing it. And hopefully the goddess of luck smiles someday, so you can do okay in life, right? And but I think the next 12 to 24 months, I think for our industry, our business, as long as if you were to tell me what Nifty will do in the next 1-2 years, I'll tell you what our business will do, right? Unfortunately, I don't think. Yeah. Right? But if say markets were to remain the way it is right now, I mean, forget, even if it's not really growing with the same ferocity as it has in the last 1 year, if it was to remain stable, I think I think it's going to be good times for people working in savings, investing, etc. Because like this whole new audience who's trying to earn more than fixed deposits,
Right.
Are looking at capital markets, and so it's potentially a good time, but you never know the volatility in the markets and all of that.
Got it. I think one important point that you said about, which I think in my experience also with Tally, when GST was getting launched, right, we had this being able to tap to what's happening regulatory frame, right, and being more prepared was very important for us to be successful. We saw the scale, a jump. What are the specific regulatory frame that you are, let's say, policy changes that you would love to see, if I can ask, that would enable a lot more?
Yeah. See, the thing is, one of the reasons I think the US markets have done so well in terms of capital markets is because it's a very advisory first ecosystem. Right? As in, and there are all these enablers in place that allows advisors to easily manage, easily collect fees, etc. Right? In India, while SEBI has put in this whole regulations around, India have today is collecting the fees, right? You have to keep going back to your customer, every month, every quarter. And so, for example, if say I was your advisor and you had say ₹1 lakh which I'm advising, I have to come back to you every month and take a check from you or take a payment from you, right? Zerodha is the custodian of sorts. Zerodha can't collect fees on your behalf from your assets and give it to me. Right, so it's just a very, very tough. If there's no cash flow predictability for a business, I mean that advisory ecosystem is not going to prosper, right? Okay. And so one of those things that we've been trying to push for is that, like I said, right, for helping, for growing this country. See, until now in India, the way advisors happened is a manufacturer has paid commissions to the guy distributing the product, right? So there's always a conflict of interest there. Right. And now that you have this advisory ecosystem where you know that the advisor can only make money from the customer and nothing from the manufacturer, you need this ecosystem to grow, right? Because it's kind of aligned with the right interests of the customer. Right. And that can happen only if he's able to collect some fees in some form, right? As in, and Indians are quite tough, and you're going to have to go back to them every quarter asking for
get your money,
like a check. Or,
especially for advice, it's tough to get that money.
So if you're able to convince a customer once to take his advisory, I think you should have the opportunity to kind of somehow collect money on a regular basis without having to go back to the customer, right? And I think that's one enabler, if put into place, I personally think can help the ecosystem significantly.
Super. Let's try to make it happen, and we'll see in different forums. We'll talk about it then. Good. Now, I wanted to take some audience questions now, and so there have been audience questions popping around, and a couple of them it's coming in. A lot of questions are coming in. Just let me pick a few. Okay. Yeah, Dilip, maybe I'll start with you. So there are a lot of entrepreneurs out here. And we have a lot of fintech companies who are in India now. They've done very well. Now they want to go to US, right? What would be your advice be in general to these entrepreneurs specifically?
I think the US market is somewhat similar to, by the way, the Indian market, the Asian market in terms of so my advice is, and by the way, in a prior life, I've done this as a small fintech company trying to sell into banks. So I kind of seen that experience from the ground up. And so I'd say first and foremost, it's kind of two different things. First is about finding, you still need to have a clear sense of what your offer to the end customer is. It's even before you can come to the partnership, if you talk about the customer value proposition and why, then how that helps kind of the bank or the banking partnership. I think and this second one is the US is a very large market. It's a very expensive market to directly go out and acquire customers. So if you are considering kind of moving from a good position in India to making entry into other markets. I would say at least initially distribution would be the key, not direct customer acquisition. Just given kind of the economics, and you get kind of patchy customers which don't necessarily end up staying kind of for the long haul. So finding partnerships that will essentially with maybe mid-sized institutions where there is a felt need and there's a propensity to kind of work together. That would be one. The other is spend a lot of time understanding the regulatory context. It's kind of very important because the US market is, the regulatory and the compliance requirements are defined. And so kind of running afoul of that would make it very, very hard, or not being aware of it, because otherwise it adds costs much later after you've kind of entered into a conversation which kind of takes away your first kind of blue chips with the customer. So trying to spend the time to learn, to understand, find one or two partners, test out kind of local relationships, and basically think about the long haul, not the short term. And don't invest too much money initially in acquiring lots of customers, but just test out, understand, test out, and learn and change would be my advice.
Oh, that's fantastic. Nithin, what do you think? You want to go to US?
Like we thought about it. I spent some time 2 years back, and after meeting all the lawyers, we said, you know what, let's not bother. I think the opportunity is in India, and I think like what Dilip said, right? I think it's extremely complex. The regulations. It's I think India is a much better place, and the opportunities here. Unless if there's a partnership, you're kind of riding on someone like a UBS or something like that. Right? I don't think it makes sense for Indian startups at least to go and try to build something there, unless you have unlimited amounts of money.
No, I think a couple of good tips came. I think the partnership and via distributor, and going to the mid-sized one and starting slow, right? I think getting those experiences. We had a similar experience when we were trying to go to UAE, Indonesia. So we did start slow in these markets. So going global, I think, is a very much felt need in India, and especially if you are a company being successful in India, want to go global. I think yes, doing a small step forward, I think, is a great thought there. Good. Okay, so this one, Nithin, this is for you, right? We're talking about rain matter, right? And how much rain matter matters to you personally, right? This is not what they do. How much does it matter to you, right?
Yeah. So see, the thing is, rain matter. There are two parts to it. Right. One, like I said, I was saying earlier, right? In 2015, we launched this broking as a service, and then when we started talking to startups, we figured that they also needed help with capital. Today, broking and all is quite hot, so there is enough capital available. Right? But back in 2015-16, India and broking wasn't hot, so it was there wasn't really easy capital available. So what we did was we started putting between $100,000 to $1 million to help these startups as well. And then we saw how much difference these startups have made to the ecosystem, right? As in the kind of products they've built. And like I was saying earlier, it's probably one of the most exciting things about this business. Like when I see that we were somehow an enabler to have these 10, 15, 20 startups to kind of build these product and businesses which have scaled. And over the last 2-3 years, as we've done well as a business, the other, almost like a guilt trip that we've been in as a business has been that what we are building essentially in India attracts only the top 1 to 4% of the country. Right. Only the top 3-4% of the country have money to invest in the markets. Right. So that's potentially what the problem we are solving for. And we said, you know what, we need to do something more. So over the last three years, we've been kind of doing a lot of giving back. And we've just formalized all of that, and we're calling it as Rain Matter Foundation, through which we are now, focusing on climate change and creating green jobs and livelihoods and things like that. So we're putting a lot of our own money into this, and saying, how much I think what the learning from building Zerodha has been that you don't really have to be a really big, large bank or someone. No, I mean, even as long as there's intent, there is intent to experiment, intent to take risk, intent to kind of connect, and I think good things can happen, right? So. So that's the next big thing for us, which I'm most excited about, which is the foundation where we are trying to help people. Firstly, startups working on climate change. Secondly, grassroots organizations which are working on green jobs, livelihoods, permaculture, creating collectives of marginalized farmers, and all of that.
Very impressive. This is very the good that you're doing is pretty impressive.
Yeah. Thanks.
Good. No, thanks for this candid conversation. I mean, I'd really like to thank both of you to really, I'm not going to summarize. We've been summarizing, but any closing remarks? So I'm really glad that we had this conversation today. I'm sure there are a lot of tips for everyone out here coming out. Any closing remarks from you guys? Anyone?
So I can, like what Dilip was saying, right? I don't think you can build products and businesses keeping revenue, etc. in mind. I mean, growth. I mean, there are outcomes. I think it has to be built in such a way that every day the customer comes and experiences something which is better, right? And the focus of the team, of the business, and the people building the product has to be that: as how do you do something more for your customer on a daily basis, and like I said earlier, right place, right time, and potentially revenue and growth can happen, right? And but I think a lot of people just chase too much of these revenue and growth and kind of lose the plot on saying, are you really doing something new better for your customer on a daily basis or not?
Oh, good. Thanks. Dilip?
I have nothing much to add. I think the only thing, kind of just looking at the current context, I think there's a huge the opportunity has never been better, I'd say, because lots of transformation. If I look at the Indian context, you suddenly, in addition to successes like Nithin's and other companies in the fintech space, you also have a huge growth in kind of the infrastructure for connectivity and kind of a variety of other things happening that essentially keep providing more and more growth opportunities, more customers, more awareness, more kind of willingness to try and test, and what appears to be a national policy framework that's actually very flexible for all of these things. So I think it bodes well for entrepreneurship and opportunity. So all the best to kind of to our audience out there.
Thanks everyone. Over to you, Jaya. Thank you.